Hello everybody, Corey here in the hotel in Nashville, but we're going to do this video since I know Thursday's videos got skipped due to doing the estimate video. So in this video, we are going to go over the trades and holdings. So we're going to go over the trades for Thursday and Friday since they were missed. For those of you that want to see those trades, there weren't a lot of trades on Thursdays, but there were lots of trades on Fridays. And then we have the holdings. However, I am in Nashville, and I'm sure my husband's not going to wait an hour for me to get through this video, so I am going to do my best to go through it fairly quickly or cut corners where I can, so I do apologize, but at least I'll be getting the video out. Otherwise, it may not happen. So, just a reminder, I am not a qualified licensed investment or financial advisor. I'm just here to gather data and present it to you so you can be more informed. YieldMax ETFs are extremely risky. Please make sure you understand the risk of these before getting involved with these. You could lose a lot of money by doing so. So make sure you know what you're doing. All right, so we will go through the trades and then we'll look at the holdings for each one of these. So we're going to start out with AIYY. So we can see here that they closed out the synthetic, or they rolled the synthetic from a $27.50 strike price up to a $30 strike price, which irritates me because last time AIYY lost, I was just telling somebody this on Reddit, that the last time, the reason AIYY went down so much was because the synthetic was raised to a $35 strike price because it went up on earnings, and then the stock could never recover before the synthetic expired, and it lost like $6 a share. So yeah, and then this is the first time I'm looking at these trades, by the way, so you know, that's my norm. I'll glance at them, make sure everything looks good, but I'm not getting in the details until we do the videos if you don't know that already. But yeah, that's irritating to me, and that scares me some. So I don't know. We'll see. But anyway, and then we have the short call that expired Friday with a $26.50 strike price, and it looks like they've rolled that to $29.50 strike price this next week. But let's scroll over so we can see. So they closed out 12,370 contracts and only bought back in 12,270, which tells me that they ended up, I guess, having to close 100 contracts due to people closing out of these or selling out, taking profit or whatever. And then you can see the prices here as far as how much it was a share and how much it was overall. I'm not going to go through those and how much was synthetic and how much was whatever. I'm going to try to save time, but you can see that they brought in $935,000. There were not any trades on Thursday, so that's why we didn't go over that. But we can see here AIYY. We can see the trades we just talked about. But so we can see here our short call for this next week is at $29.50, which we're already over that strike price by 7 cents. Because at the end of the day, the stocks were going down absolutely all day long, and then towards the end of the day, everything came back up. So yeah, we're over this by 7 cents already. So we're already capped on the upside for this one, and we're underneath the strike price for the synthetic. So yeah. That's all I'm going to say about that one. Let's move on to AMDY, because that one's a sore spot for me, because I did own a bunch of those. Actually, I do still own it, because I really hate selling out of stocks when they're negative. So I have a problem with not being able to close them if I'm losing money. I don't want to realize that loss. But anyway, we have AMDY here, AMD. We had 2 short calls that expired on Friday, and then we have a new short call there for next week. We had a 170 and 172.50 strike price. We now have a 170 strike price. So it looks like they only paid 1 cent to close those out last week. And you can see that data and the rest of the numbers over there on the right. They didn't have any trades on Thursday either. In fact, the first thing we have trades on is going to be Phoebe. So let's move on down here to the holdings so we can see that new short call there at the 170, and we're underneath that strike price by 2% at 167.02. Looks like we have a possible upside of about 31 cents there for AMDY. So AMZ, we'll move on there. They added to the synthetic position they already had. They closed out of the short calls that were going to close on Friday. It cost 1 or 2 cents to close those out there. Now they have 3, which is odd. But they have 3 short calls going into... Okay, never mind, I see. They actually only have 2, but 2 of them are broken up. So it looks like they had 100. What happened is the first 4 lines is where they had 100 additional contracts where people are buying into the fund. And so they did 100 on the synthetics, and they split up the other 2 in 50 and 50. They did 50 at 177.50, and they did 50 contracts at the 180. And then what they did when they closed out the short calls for the week, then they rode those to the 180. So you can see all the dollar amounts on the right if you'd like to see all those. But overall, they brought in $636,000 there. So if we go on to the holdings here, we can see those 2 new short calls there. The 177.50, we're underneath that 1% or $1.05. And then we have the 180 strike price, which we're under by 2%. Looks like we have a possible upside. Let me zoom this out so I don't have to keep scrolling. We're going to go over all of the trades, so I don't have to really show that at the beginning. Oh my goodness. I can't get it just perfect. All right, here we go. So we have a 44-cent possible upside, or about 40-cent upside there for the 6,000 short call contracts. Then we'll move on to Apple here. So they closed out of the 2 short calls that were expire on Friday, the 190 and 192.50 strike price. It looks like this next week's strike price is 192.50 for the 3,380 contracts here. They closed out at 192.25 on Friday. So you can see it ended up costing a couple of dollars to close out the 190. So they closed these out at different times. They must have, I don't know. They must have, I'm thinking, I don't know. I'm not even gonna, whatever. But yeah, it only cost them 35 cents a share to close out the 192.50. And then it cost them $2 to close out the 190, which, I mean, they were over at 225. So they did that, had to have done it, I guess, earlier than the day. But I don't know what times of the days they do these, so it's really hard. I don't know if it's always the same or if they just wait and see. I don't know. But then we have Apple here. So that short call, the 192.50, we're only 17 cents away from that, so it only shows a 2-cent upside for that short call. And then if we go to Coney here, we have 3 short calls that were closed out. And we have our new short call for next week. So we went from a 255, 250, 250, 250, 257.50 to a 235 strike price. They paid 2 or 3 cents to close those out, bringing in $9.3 million there. So if you see here now, we only have that 1 short call, which we're underneath by 4%, with a possible upside of 88 cents. Then we have Dizzo here. We closed out of the 1 short call and created the other. So they had a 103 strike price, and now we will have a 104 strike price there. They brought in $89,000. And so we can already see they had a 103 strike price already for next week, and we're over that by 91 cents. And so we have the 104, which we are only 9 cents away from that. So that only leaves about a 2-cent upside there for Dizzo. So now if we look at Phoebe here, we have from Thursday's trade that we didn't previously cover. Phoebe, they added to the synthetic position and they created a new short call for next week with a 482.50 strike price. So it's just first 3 lines there. And then on Friday, they closed out the short call that expired at the 485 strike price. And then we have the new one at the 470 strike price. They only paid 2 cents a share to close those out. They brought in $461,000. So now we get to the holdings, and we can see the 2 short calls there, the 470, which were 1% under, and then we had the 482.50, and we're 3% under. Looks like a possible upside of about 11 cents there. So then we have a GDXY. If you see those first 3 lines there, this is from Thursday. They added to the synthetic and created a short call for next week at a 36.50 strike price for 135 contracts. And then our trades from Friday, they closed out the Friday short calls that expired. And we have our those were at 36 and 35.50. Then we have our new short call for next week, which is a $36 strike price for all 1,075 contracts. And you can see they closed those other ones out for 2 and 5 cents last week. They brought in, it looks like here, why is these up here green and these down here not? I don't know. They brought in $30,000 there though for GDXY. And so we can see here we have those 2 short calls, 36 and 36.50. Thank you. And we closed on Friday at 35.30, so we're below those 2 and 3%, but 2% is only 70 cents. So right, so the other one's $1.20. All right, so majority of our contracts are at that first strike price, so we're looking like a 33-cent possible increase there for the short calls. All right, let's look on Thursday. So we did have some GUI on Thursday. They added to the synthetic and created a brand new short call that expires next week. And it was for 95 contracts here. That new short call is 177.50 strike price. And then if we look at Friday, here we had, they closed out of the short call that expired on Friday at the 177.50, and then they added, or they created 2 new short calls for next week at the 175 strike price and 172.50. So it's looking like we're going to have 3 strike prices. So let's look at our holdings. So holdings, yeah. So we have 3 short calls there, 172.50. We're already over by 1 cent. And then we have the 175 and the 177.50. So the majority of the contracts are between the 172.50 and 175. So I'm not going to say there's going to be, I don't think there's going to be any upside here. I mean, there will be maybe a cent or two because there's 1,000 contracts at 172.50 and 1,430 at the 175. So there could be a couple of cent increase here, but not much for the short calls. Now you could get some more increase based on the synthetic position and that going up if the market value for the synthetics are more than the short call, you know, than the short calls actually going down, as in the market value there. So anyway, let's move on to JPMO. So JPMO had no trade, so it looks like Misty's the next trade for Thursday. If we look here for Friday, they closed out the short calls that expired on Friday with a 200 and I'm going to zoom this out some. In fact, I think people have said before they can see it when I zoom it out. That way I don't have to keep scrolling and scrolling and scrolling. In fact, I'll even, sorry, I didn't mean to hit the screen. I'll move a few of these, maybe. Then that way we can have it all. There we go. I know we have lots of things we're looking at, so now you can see all this on one screen. So I can actually do that a little bit more. Where was I at? The short calls that expired for JPMO, 200 and 202.50 strike prices. They closed those out for, say, we ended up closing at 202.63. So the 200 one, and they only paid 20 cents to close that out. So they must have done that midday when the stocks were all way down. And the other one, they only paid 1 cent to close it out. But then we have a new short call here that expires next week at the 202.50 strike price. For the 915 contracts. So let's look at the holdings. Well, we can see that 202.50 strike price, we're already over that by 13 cents. So no possible upside here for the short calls as we're already over it, but I don't know if they'll do anything next week with this. I doubt they will. They'll probably just let it ride out and see if it'll go back down before the end of the week, but you could have a little bit of upside for the synthetic position here. And next we have Murni. So on Friday they closed out the short call that expired with 185 strike price. Paid 16 cents to close that out. Like, I don't even understand that. I don't know. Because, I mean, we're $40 underneath the strike price. I guess because it was done earlier in the day versus waiting till, I don't know, closer to the end of the day. But I still don't understand why it would be that high, because unless the IVs is really high on this one. But I don't know. It doesn't make sense to me. Anyway, short call for next week for this one, the strike price is $147. All right, so if we look here, 147, we're underneath that strike price by 3%, so we have possible upside of 57 cents just for the short call. But keep in mind, we had that synthetic position up there at the 160 strike price, and we're underneath that by 11%, so it's bringing the stock price down $2.22 a share. So let's move on to MSFO. So they added 30 contracts to the synthetic on Friday. And then they also created a new short call with a 415 strike price. Then they closed out. So this is interesting. I don't know what they did, or I don't know. Your guess is as good as mine here, but they closed out the short call for this Friday that expired yesterday with a 432.50 strike price. Got it. Understood. Paid 2 cents. But then it says they closed out the short call that expires next week with a 425 strike price. And that was 100 contracts. But then it shows they did 3 new short calls for next week. Actually, it's 2. One of those being a 425 strike price, even though they just closed one out. And then the other one being a 422.50 strike price. And maybe it's because, they did too many. Because if you look at the bottom, 3, they did 800 contracts, 700, and then 10. That's 1,510 contracts. They only had 1,410 contracts. So they had to close 100 of those out. Otherwise, they would have been over. I'm guessing nobody caught that. But, well, somebody caught this one. But you'll see later on Squee, this happened. And I only caught it based on my data check that shows they're over 80 contracts. So I don't know if it's true and they just did a typo on the trades sheet, or if they actually went over 80 contracts, but we'll look at that later. But that's what they did here. And then they closed it out after they called it. So, okay. So if we go to the holdings here, we can see we have a total of 4 short calls. 415, which are already over by 61 cents for 30 contracts there. Then we have a 422.50, which we're 2% under, and this has the majority of our contracts, 800. And then we have a 425, which has 610 contracts, and then we have a 437.50, which has which we're 5% under with 100 contracts. Okay, so all of our numbers match up as far as the number of contracts here. As far as upside, I don't know. I'm going to go with 18 cents based on that second strike price having the majority of our contracts there. So let's move on to Misty. So we have trades from Thursday for Misty here. They added, what do we have? 15 contracts. I'm just going to zoom it out also. Well, I guess I can't because I had to change all of the headers on this one, and I'm not going to do that to you. All right, so we have Misty. They added to the synthetic and then created a new short call for next week for 15 contracts there. That short call strike price was 1,800. So if we look at Fridays, they added okay, so they added a new 35 contracts, but the top 2 lines are the 35 contracts for the synthetic, and then the very bottom line is the 35 contracts for the short call that goes with those. So that's those 35. That's a 16.15 strike price for that. Then in the middle, we have the 3 short calls that they closed out, the 1740, 1770, and 1720, because those expired on Friday. But the numbers, okay. So they took this 885, and that's what these are here. So this is a 1610, well, they're both 1610 strike prices. And then these two, 70 and 10, or that one 80. But they're both the same strike prices there. They just paid different prices for them over here, which is why they're split up. So anyway, lots of trades going on there. But they brought in almost $3.4 million for those. So let's see what we have. So we have 4 short calls going into the week. We have 1610, 1615, 1770, and 1800. We're below those strike prices 5, 6, 14, and 15%. Majority of our contracts are sitting at that first strike price. So we're looking at a possible upside of $1.61 for the short calls. Okay, so we didn't have any trades on Thursday for Nefli. But Friday's trades, they closed out of the short calls that expired on Friday. Paid 3 and 4 cents to close those out. And then the new ones for this week, 825. So they split up the contracts between these 2 strike prices, but they have a 640 and 645 strike price there. So if we look at the holdings, we can see those 2 there. Of course, Netflix though closed at 642.03 on Friday, so they're already over the first strike price by $2.03, which has the majority of the contracts. So we're almost $3 underneath the other strike price. We have no upside for the short calls here. Possible you might be able to get some upside for the synthetic positions, but it won't be, but just some cents here and there. So let's go on to NVIDIA. So we have NVIDIA, we have lots of trades from Thursday here. So half of those lines right there are like all NVIDIA. Let's see what they did, because I don't even know here. So the first 4 lines is where they closed out the synthetic positions that they had. and they rolled down from a $1,040 strike price to $1,130 strike price. And then the next two, they closed out the short calls that were going to expire yesterday with the 1,080 strike price and 185, and they moved those to next week with a $1,215 strike price. Yep, and that's it, because the next one is PayPay, the last one for Thursday too. All right, so then if we look at Friday's trades here for NVIDIA, they just added. They added 120 contracts to the synthetic and a new short call, created a new short call with a strike price of 1,135. So if we go over here, we can see our holdings. We have two strike prices here, the 1,135, which were under by 3%, and then we have the 1,215 strike price, which were under 10. And that is where the majority of our contracts are. So we're looking probably about a $2.50 or so cent upside there for those short calls for NVIDIA. And we're almost done here. We have OARC. We have the two short calls that expired on Friday, 44, 50, and 45 strike prices. Strike prices for this week are 43. Well, is 43. So we can see here, 43, we're currently underneath that 1% or 55 cents. It looks like about a 14-cent possible upside there. So let's move on to PayPay. We had some trades here from Thursday. Those three lines right there. They added, let's see, 55 contracts to the synthetic and created a short call with a $64 strike price there. And then that is all of Thursday's trades. So then if we go to Friday here, they closed out the short call that expired on Friday with a 63 strike price for 3 cents. And they opened up, let's see, they split those contracts between a 63 and a $64 strike price for next week there. So if we move on to the holdings there for PayPay, it looks like we closed exactly at $63, and we had a $63 short call with 1,000 contracts. So then we have our $64 strike price. We're underneath that 2% or a dollar for the other 2/3 of the contracts. So we might have 10-cent upside for these short calls, maybe. And then maybe some extra for those synthetics. So let's move on to SQUE. So SQUE here, you can see the reason I have these contract numbers in red, this is what I was talking about with the other one. They had closed out 110 contracts, then 4,405. So that means they had 4,515 contracts to use for next week. Instead, they did 4,595 contracts. So I don't know if it's somebody missed the fact that they already had 80 contracts open, or if this is a typo. I don't know. But anyway, this shows that they closed out the short calls with a $68 and $69 strike price. They paid 1 cent to close these out, and the one for next week now will be $65. So if we go over, we can see here, SQUE, again, and this is what I'm talking about. See, we had 45.95 is our number, and now we have this at 45.95, and then we have those 80 here. And these should not be more than the short calls should not be more than the synthetic. They can be less, but they should not be more. So we'll watch that. That should be fixed on Monday, though. But we have those, the 65 and the $68 strike price. We're underneath those 1 and 6%. The 1% is 92 cents. And that is where the majority of our contracts are. So we have a possible upside of 27 cents here for the short calls. And then if we move on to Tesla here, so they closed out the short calls that expired on Friday, the 187.50 and the 185 strike price. They paid 2 cents to close those out, created new short calls for this next week with the 180 and 182.50 strike prices. And then if we look at the holdings, we can see those two there were underneath those strike prices, 1% and 2%. We closed out at $178.10 on Friday. So it looks like our upside, I don't know if we can have 15-20 cents for the short call, because we have 7,000 contracts at the 180 and 32,000 at the 182.50. So yeah, that's what we're looking at there. And then we have Zomo. They closed out the short calls that expired on Friday, the 115 and 114 strike price. And they were over both of those strike prices. This is like a never-ending story with Zomo. 117.26 is where they closed out. So luckily, it looks like they closed these out in the middle of the day before, the stocks came up. So they only paid 73 cents to close out the 115, even though at the end of the day they were 226 above. And then the 114, they paid $1.75 a share to close out, even though at the end of the day they would have been 326. So they did good getting these closed out earlier in the day. And then we have Zomo here. The holdings, the never-ending story again. Two short calls, 116 and 117 strike prices, and they're over both of those. So no upside here for the short calls themselves, but possibly some upside for the synthetics. We are $1.26 over the 16, and we are 26 cents over the 117, which is where the majority or 3/4 of the contracts are sitting currently. The last one here is Crash. They closed out the short puts that expired on Friday. They paid 22 cents a share to close those out. And then the new strike price for this next week is 170. So if we look here, we can see our holdings here. We only have the one short put, and we're currently 5% above that. Yeah, and that's it. So thanks for hanging out. Sorry for trying to rush through this, but I wanted to make sure y'all got this. I didn't want it to be 2 days of not going over this data. So anyway, hope y'all having a great weekend, and I'll talk with y'all later. Bye.